Stocks are up solidly this year, but is it nothing more than a bear market rally? Morgan Stanley Wealth Management CIO Lisa Shalett believes investors are too optimistic. Lisa joins me now. So you recently wrote that the stock market was entering what you called a dangerous phase. What did you mean by that?
Well, look, this has been a market that has been highly anticipatory of positive developments, that earnings are troughing here in the first quarter, that the Fed is done hiking, that inflation is cured, and that we're moving very rapidly to a place of a soft landing that would be confirmed by Fed rate cuts. And so the dangerous phase is, at some point, we're going to get the facts. And the market is going to have to reconcile its expectations with reality about whether or not, this year's earnings are in fact going to be flat to up, whether the Fed is really done hiking, whether inflation is really tamed, and, in fact, whether they're going to quickly move towards cuts.
So I saw an interesting report this week by Nick Colas at DataTrek, where he said it's always dangerous to assume that the market is wrong. He said that recession is a feature, not a bug, that what a recession does is it ends the inflation problem. It boosts productivity. Why? Because the unproductive people lose their jobs and the other people start working harder. What do you think? Is it possible the stock market is sort of looking through those issues you raised to that post-recession time when everything is rosy again?
There's no doubt that this is a market that is trying to look through things. We've gone through a period of time where there's been some upside surprise in the data, right? Where inflation, we've had some constructive data points on inflation. We've had some better than expected news on first quarter growth, and GDP was a little bit stronger because of the weather than some folks thought. But there's also been some less good news that the market has shrugged off, and things like the banking turmoil in regional banks was kind of a ho-hum in terms of the overall market. A market declaring that there's no kind of systemic risks to a credit contraction that might come from that episode, and that's in our minds, some pretty optimistic thinking.
Yeah, you wrote, in fact, that the reduction in lending as a result, in the aftermath of that crisis, was the most dramatic in 50 years. How is that going to ripple through the economy?
The small and medium-sized businesses who tend to be the primary banking customers of the smaller regional banks account for a huge portion of the economic activity in our country. So our view is if that sector of the banking industry pulls back and tightens credit, there are going to be some ripple effects. And in fact, in some of the NIFIB survey data, the small business survey data that we've seen, it's been, confirmed that these small business owners are saying, their intentions around capital investment or viewing this as a good time to expand their business is at a 40-year low.
Ouch.
That doesn't tend to portend good things for the economy going forward.
What's the best play for investors? Are there any opportunities?
We believe that below the surface of, some of the commercial indices like the S&P 500 index or the NASDAQ index, there's been a lot of folks throwing the baby out with the bathwater, and that there is value out there. We're finding opportunities in some of the larger cap financials, for example, that, suffered pretty badly over the last month and have just come through a very good earnings season here in the first quarter, demonstrating their resilience. We see some opportunities among energy stocks, particularly as the supply and demand of energy tightens up here. With the OPEC actions on the supply side and, some of the demand that may come through from a rebound in emerging markets and China in particular. Real estate investment trusts, while we haven't loved, some of the office space and some of the commercial real estate plays, REITs in the public sector, publicly traded REITs, have sold off pretty aggressively here, and there may be some value and yield in that sector.
All righty, Lisa Shalett, thanks so much for coming on the show.